Hey, what's up, my friend? So in today's episode, I want to talk about how do you choose a Forex broker so you don't get scammed. So here's the thing, right? I know that many of you are new to trading, you're worried about, putting real money out there because who can I trust, right? What if the broker runs away with my money? What if the broker, hunts my stop loss, right? What if the broker, is unreliable, right? How do I choose a broker? So in today's episode, I want to share with you 7 things. 7 things to look for before you choose a Forex broker. Number 1, you want to make sure that your Forex broker is regulated, and not just regulated as a loosely described term. You want to make sure that they are regulated in the right countries. The 3 countries that I look for, right, is either Singapore, Australia, or UK. The broker has to be regulated in one of these countries because I find that the regulations in these 3 countries, right, are one of the best out there. If it's not in any of these 3 countries, I would usually just skip it, right, and move on to something else, right? Call me biased, right, but I find that these 3 countries, the way they run their finance industry, right, it's really strict, right, in terms of compliance. I'm based in Singapore, and I find that the Monetary Authority of Singapore, they do an excellent job, right, in protecting the retail investors and traders. So number 1, right, make sure the broker is regulated, right, in the appropriate countries. Number 2, when you choose a Forex broker, you have to be aware of the markets that they are offering as well. I know most of you trade Forex, but at the same time, you want to trade other markets as well, not just Forex. Maybe stuff like oil, soybean oil, cocoa, orange juice, pork bellies, whatsoever. And many Forex brokers, they just simply offer you FX markets and maybe a few common commodities like, oil and gold. But if you want more, right, trading all the exotic markets, right, then you have to make sure that that Forex broker of yours, right, or that CFD broker of yours, it offers more than just FX. If it doesn't meet the criteria, you have 2 choices, right? Number 1, find one that meet your needs, or number 2, have 2 different brokers, one to trade exotic markets and one to trade Forex, right? So whatever the case is, be aware of the markets that your Forex broker offers. Not all Forex broker offer similar number of markets, so be aware of that. Number 3, live support, right? At this time and age, right, communication is almost instantaneous. So for any business day of the week, I expect a live support with the broker. So when I have any issue, I can just log onto the website and talk to someone and, find out what's the problem, what's the issue, and how we can rectify it. Okay, I don't want to be just emailing because email is too slow, right? So most brokers these days, right, if they're legit, they offer live support and to, walk you through the issues that you might be facing. And number 4, withdrawal, right? I think this is one of the most important factors, right? Withdrawal. When I ask for a withdrawal, I want my money back as soon as possible. I don't want hearing excuses from the broker like, oh, if you leave the money with another 1 more month, we will give you an additional $200 deposit bonus, blah, blah, blah. If you hear excuses when you want to take out your money, run far away, right? Because that's a huge red flag. When you want to withdraw your money, it should be, boom, that's it, right? Within 2 to 3 business days, you should get your money back. I mean, depending on the medium of the withdrawal, but there should be no excuses, right? The money should come back to you ASAP. Number 5, reviews, right? So reviews is it's a little bit tricky here because you have to understand in the broking industry, right, or any competitive industry, it's very common for competitors to smear one another. So they go to this type of, review platform, right, and say bad stuff about their competitors, blah, blah, blah. So as someone, right, who is reading reviews, you got to be smart about it, right? You got to kind of read in between the lines, right? So a few tips here for you, right? So when you read reviews, right, I find that the most genuine reviews, right, are the ones that are long, right? Multi-paragraph, right? 2 paragraph, 3 paragraph, because those are from people, right, who are genuinely either very happy or very frustrated with the broker. So the longer the review is, right, the higher chance that it is a real review. Because if it's a fake review, it's just 1 or 2 lines and that's it, right? There's nothing more else that it can say because it isn't a genuine review. But if it's a real review, right, they will spend paragraphs after paragraphs, penting down their frustrations, their anger whatsoever, and that's how you separate, real and fake reviews. And when I look at reviews, right, also I pay attention to 2 things, all right. I want to make sure that the broker I'm with, right, don't have many issues, right, of withdrawal. Because if you read a broker reviews and you find that most of the complaints I know with people, having difficulty withdrawing their money, that's another red flag, right? If people are having difficulty pulling out their money, then chances are, when you put money with that broker, your money is likely to get stuck. So the first thing I look for is, again, whether the reviews, right, a lot of the complaints, is it about withdrawal or is it maybe some superficial stuff like, maybe just poor customer service or the people being rude and stuff like that. Those are the ones that won't affect me too much. The other thing I look for is traders saying that they are getting stop hunted, right? Or rather, their spreads suddenly widened and they get stopped out for no reason. If that is a recurring theme, right, then again, that is something that I want to be careful of as well. All right. So that is about reviews, right? This is how you actually go about, reading the reviews of the broker that you want to trade with. And number 1, 2, 3, 4, 5. Number 6, transaction costs. Right. So if you are, I would say, if you're a higher time frame trader, transaction costs won't really matter to you as much because these days brokers, their spreads, right, are relatively low. But if let's say you're a scalper, a day trader, then yes, transaction costs would matter to you a lot because there are some broker that offer you, let's say, a commission plus a really, really tight spread of, let's say, 0.1 or 0.2 pip. Right? If you do the math, right, the commission that you pay plus that really small spread, right, is actually cheaper than just paying, 1 or 2 pip spread, but without commission. Because if you do the math, right, the commission plus a small spread is actually cheaper than just paying a fixed spread. If you do the math, right, you will see it will work out. So let me give you an example. Let's say a broker offers, hypothetically, whenever you trade one standard lot, right, you buy, let's say that's a $3 commission charge. And when you sell, let's say that's another $3. And because you have this commission-based pricing tier, right, your spread is only, let's say, 0.1 pips. So if you do the math, right, $3 plus $3 plus 0.1 pips, right, $3 is actually 0.3 pips, right, when you trade one standard lot. So 0.3 pips plus 0.3 pips plus 0.1 pips, that's a total of 0.7 pips when you buy and sell a position. Let's say one lot of euro dollar. But let's say you go with another broker that offers you a fixed 1 pip spread on euro dollar, you can see that you're actually paying 0.3 pips more than the other broker that offers a commission structure along with it. So you got to really add up the total cost, right, and see which one is cheaper or more expensive. And this really matters, especially if you're a day trader trading 20-30 times a day, right? All this little spread, right, all these pips, right, adds up to a significant amount after 1 month, 2 months, or 3 months. And number 6, right, I want to share this with you, right, is that how do you actually protect yourself from a broker if something really does go wrong? Let's say, you get stopped out of a trade that you otherwise shouldn't have been stopped out. So what you want to do is to protect yourself, right, you want to screenshot the trade that you did, right, that got stopped out, the chart of the trade that got stopped out, right? Let's say this particular broker you're with, right, the spread expanded 50 pips and you got stopped out, whereas you look at the other platform, the spike didn't occur. So if you screenshot both charts, right, of 2 different platforms, right, you have a case to argue with. Why am I getting stopped out on your platform, whereas, the other platforms that I look at, the spike didn't occur? So now you have a case, right? And if there isn't any resolution, you can take it to social media, right? If, when things is legit, right? When you want to help the underdog, right? People would share for you, right? And that would really, help the broker to make things right for you because now they have reputation at stake to protect themselves, right? So that's one way you can go about it, right? The other way is just, can go straight to the authority, wherever the broker is regulated, like MAS, and, tell them, say, hey, this broker is, not dealing with you fairly, yada, yada. Usually brokers that are serious about their business, they want to keep their license. They don't want to risk losing a license over, someone's complaint, right? So they'll do their best again, right, to fix things right for you. So that's how you can protect yourself, right, from, if anything does go wrong, okay? So I know I've covered a lot about brokers, in this training video. And if you want a recommendation, right, I'll put one in the link below this video. You can check out the recommendation. If it's good, right, you can feel free to sign up with it. If you don't want, that's perfectly fine as well. So with that said, I wish you good luck and good trading, and I will talk to you soon.